Hello, today I'm going to talk to you about life insurance. Life insurance can be many different things, from a term policy to mortgage protection to final expense. We will do uh, different videos on each of these. You can also have a whole life policy. You can have a universal life policy, an index universal life policy. Um, There's also juvenile life policies. There are different requirements for each of these. Different companies also do different underwriting on each of these. Also, this is something that they do look at tobacco versus non-tobacco. Most companies, the tobacco use would be any form of tobacco, whether it's chewing tobacco, the vaporless cigarettes, whether you smoke, whether it's cigar, whether it's not cigar, um, whether you dip or chew, pretty much any kind of tobacco use, even the patches for quit smoking count. And basically, you have to have quit smoking for 2 years for most of them before you're considered a non-smoker. If it's written as a smoker, and we can go back after you've been quit smoking for 2 years and basically do a review on the policy and try to get you submitted as a non-smoker and lower your rate. The rates are determined by sex as well as age, as well as whether you smoke or don't smoke. You can be denied because of health conditions, although there are guaranteed issue products that are more expensive and more limited on how much you can get. With guaranteed issue products, you have it's a final expense product, which is a whole life for under $100,000 base amount. Uh, that basically you have to have the policy and survive for 2 years before you can die. Otherwise, it's return of premiums only. If you survive more than 2 years, you get the full face amount. Uh, Term policies, they're great for mortgage protection and credit protection. Uh, Most young people like them because they don't expect to really have to use them. I'm not a big fan of writing them for just basically to cover you if you die. I like them more as critical uh, for basically like mortgage protection, credit protection, um, because that's really how they were meant to be written and used. Um, UL and an IUL are more for retirement and building a big cash value. The UL is going to invest, basically put your money in mutual funds and stocks that are going to return a higher value. Whole Life does invest in mutual funds and stocks, but these are not expected to return as high of a value. An IUL is a different monkey. It's also known as an index universal life. The UL is a universal life. With the index universal life, you basically have some of your money put into the general fund, and the general fund basically goes into safe stuff, mutual funds, bonds, those kind of things. Then you have a section of your money that is put into um, basically an indice, which can be anything from the S&P 500, the Dow Jones, any kind of indice. Uh, these can offer you basically a ceiling and a floor. So you're either going to gain so much or you're going to gain so much, and basically you can only gain so much. And if the market does better than that, you don't get any more than basically your ceiling. If the market crashes, as we've seen it do in the past years, you don't lose any money, or you lose very little money or you can still gain some money depending on how the IUL is set up. Um, these policies are great for retirement because generally you're going to gain 5 to 6% every year. When you retire, you stop making payments on it, you start taking loans out. The loans are going to be at about a 4% interest rate, so you're making more money than you're drawing out. You never have to pay that loan back. Your death benefit is your collateral. If you live long enough with triple compounding, then basically you're going to be making enough that basically the cash value will pay the loan back, and basically you'll have your a large death benefit. These can also be written on children and be used to help fund them basically through college and getting a car and getting a home, and then when they get ready to retire, they can be basically where they're sitting on in their IUL with $1 million or more, and even have also had the parents draw out for their retirement on it. Another great children's product that would be great for grandparents to get, or for even parents to get, is a juvenile whole life policy or a juvenile term policy. These policies generally cover the child up to age 18. At age 18, the child can convert the policy without having to resubmit medical proof of insurability. So basically, they get an adult policy, and they get it generally at the same rate as the juvenile policy, which is great because you get a child at 1 year old. One of these, you're talking about $1, $2, $3 at most. So basically, on any of these, you're talking about a cup of coffee a week or more. Now, when you get into the teen years and stuff, yes, you are talking 17, 18, to even maybe 30, $40 a month. Okay, so it gets a little bit more expensive the older the child is, but it's a great investment. It also teaches the child the value of investing in their life and investing in their future. And it does teach them a good, safe way to invest. This is covered under the life license, so any agent selling these would have to have a life license. They do not have to have a variable life license, but they do have to have a life license. Also under the life license, which will be covered in another video, is another retirement vehicle called an annuity. We will discuss these more in that video. I hope this brief introduction gives you some great information on basically life insurance. As I said, we'll cover more in other videos on life insurance, and we'll even talk about annuities in other videos. Thank you and have a nice day. Today we're going to talk about term life insurance. Term life insurance can be written up generally to $1 million policy. Although $1 million policies, whether term or any kind of policy, if it's written for that as the face amount up front, it's generally frowned on by the insurance companies, and they generally do try to turn them down. They will look at the reasons why you want $1 million policy. Sometimes with businesses, the higher face amounts are allowed. Most companies will put limits such as $500,000 on term. Term products are great products for mortgage protection and for credit life. They are used heavily for those because generally your credit, where you applied for a loan, or you got a mortgage loan, you're going to have 15, 20, 30 years usually, and so you'll be paying on the loan that period of time. You set the face amount for the amount of the loan, plus a little bit extra to give your spouse or loved one a chance to get back up on their feet and get a job and be able to support themselves. Uh, that is basically how you do a mortgage protection or a credit life policy. So we do have to look at what your loan amount is and also what will be needed to basically sustain the loved one that is left and any children for 2+ years. And that's what we write the face amount for. And when we write it, it will be for that. And basically, as you pay on the loan, the extra is just basically extra that you can live on. So you will end up with possibly more, but it's meant to cover you if you get disabled or if you are killed, whether in an accident at work or from natural causes. Uh, so that gives you a little bit on mortgage protection, on credit life, and on term life. I hope this was helpful. If you want more information or if you would like a quote, please give us a call at 662-912-3914. Thank you and have a nice day. Today we're going to talk about whole life, and in talking about whole life, we will also talk about final expense. Let's first start with final expense because it can be some of the easiest policies to talk about. With a final expense, you have two types. You got guaranteed issue and you have the regular final expense, which has very heavy underwriting. Guaranteed issue, if you have health conditions, that's when we want a guaranteed issue. They do limit you on the face amount. Usually it's 20,000 or less. Sometimes it can be 5,000 or less. With guaranteed issue, they do not do the underwriting, but the premiums are higher. Also, smoking, non-smoking does factor in with final expense just as it does with any life policy. Sex does matter with the rates. They can look at your occupation as to whether you're in a hazardous occupation or not and choose to cover you or not cover you. Final expense, for the most part, where there's heavy underwriting, is anything $100,000 face amount or down. As part of this insurance agency's policy, we look at what you are planning on for a funeral. So if you're planning on being cremated, we're looking at about a $5,000 to $10,000 face amount. We don't look at doing much more than that. We will look at basically if you do want to leave some to family members and how much you want to leave to family members and calculate that in. If you're wanting an actual funeral and to be buried in the ground, then we look at 10,000 plus. And in looking at 10,000 plus, we will write it. Generally, a funeral is going to be about 10,000 to about 25,000, depending on how fancy of a funeral you go. You can have even more fancier funerals and pay more, and it's all up to you. We'll look at what you want and try to base a policy on that. But for a final expense, you're generally going to be under $100,000. You can even have it where it leaves a little bit to your loved ones. Then you have whole life. Anything over $100,000 is just considered a whole life policy. Any kind of whole life, whether it's final expense or not, it earns cash value. So these policies do have cash values. You can take loans out against, you can draw some of your cash value out, um, but in doing so, you can hurt yourself. These do not earn as much cash value, and the loan percentage can be almost what you're earning, if not more than what you're earning in cash value. Um, so generally, it's not recommended to take a loan or to draw off because then you can hurt your death benefit. That gives you a little bit of information about whole life and final expense. If you're interested in wanting to learn more, or you want to get a policy quote, then please feel free to give us a call at 662 912 3914. Thank you and have a nice day. In this video, we're going to talk about one of our favorite products, the Universal and the Index Universal Life product. These products are great for retirement. They do invest in mutual funds and bonds on at least part of the product. The Index Universal Life will also invest some of the money in an index. And basically with them, you're guaranteed to make so much money. You generally make around 5 to 6% each year, and if you take a loan out on them, the loan is tax free, and as with any kind of life insurance policy that has a cash value, and basically it'll draw about 4% interest is the general going rate. Sometimes it's a little higher, sometimes it's a little lower. So you're making more than you're actually drawing out. So when you die, basically the loan can be paid back out of the cash value and you still have a full death benefit. As I said, these are great retirement vehicles. The Index Universal Life is very well for retirement. Highly recommended for basically retirement planning. And they're also great. With the IUL, you can also do a great juvenile plan, as we talked about in the juvenile life. If you're interested, please give us a call. Our number is 662 912 3914. We'll be glad to give you a quote, give you more information, and talk to you. Thank you and have a nice day. Welcome back. Now we're going to talk about a form of life insurance that is for children. We're going to talk about the juvenile life. The juvenile life comes in term, whole, and index universal life, depending on the company we write for. Term, you will have a period of time and then you have to renew. Juvenile life, generally, whatever you get it for up to the age of 18, the rate is locked in. Also, with juvenile life, there is no proof of insurability required. So, no matter what the child's health conditions are, they are insurable. And when they reach 18, they can keep the policy, turn it into an adult policy, and not have to prove insurability. There are limits on what the face amount can be for a term and whole life. Generally, it's around 30,000 as a max. So it is considered more of a final expense type thing on the whole side. Not really meant to be much more than a $30,000 term insurance on the term side. Index Universal Life, you can write it for a 30,000, and basically it's meant to grow and give the child some money for uh, when they finish college to pay off college loans, to get a car for them to go back and forth to work, to basically buy their first home when they're getting married and stuff and needing a home. And then when they retire, basically they can be $1 million baby, is what is considered, because they'll more than likely have $1 million face amount and be able to take loans off of it and basically live a nice tax-free retirement. So that's our brief. That's basically our overview of the juvenile life. Remember, these policies, as we said in our life overview, basically cost you about what a cup of coffee at Starbucks would cost you a week. So basically, they're not very expensive if you get them where they're young enough, because these policies can be written all the way down to about 14 days old. So if you get them when they're young enough, basically you can even get them cheaper than a cup of coffee a week at Starbucks. So very affordable, very good investment. Also, it does help teach the child to invest in their future. Thank you and have a nice day.